Cathie Wood's ARK invests in a Bitcoin futures ETF after dumping Grayscale holdings. And we speak with legal experts about what region is winning the race when it comes to crypto regulation. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Bitcoin is in the red this morning. As of noon Eastern, the cryptocurrency fell 1.5%, trading around $42,500 according to Coinmetrics. Ether traded flat after jumping 6% yesterday as investors moved into the cryptocurrency ahead of key catalysts expected next month. Those include Ethereum's next big tech upgrade and a potential decision on the applications for spot Bitcoin ETFs in the U.S. Meanwhile, we're also watching Binance's BNB token coming back to life after struggling along these last few months. Today climbing more than 7% as of noon Eastern and hitting its highest level since April. It's unclear exactly what's driving the action, but DApp Radar shows a 12% surge in decentralized app volume on the Binance Smart Chain. Okay, let's talk about the top stories. Cathie Wood's ARK Invest bought more than 4 million shares of ProShares Bitcoin Strategy ETF, known by its ticker BITO, which tracks the price of futures tied to Bitcoin. That's according to a trading note late yesterday, which also showed that ARK sold shares of Coinbase worth more than $27 million based on the crypto company's last closing price. Coinbase shares have rallied more than 400% so far this year. ARK also dumped the remainder of its Grayscale Bitcoin Trust holdings. Sources close to the matter told us that the decision to exit GBTC was driven by a combination of regulatory and tax uncertainties and the availability of other products which would maintain the investment management firm's exposure to Bitcoin at a lower cost without the risks GBTC presents. Speaking with Bloomberg this morning, Wood said that BITO is already approved and there's no regulatory uncertainty tied to it, so ARK decided to maintain its exposure through the ETF for the time being. She also pointed to the tax and regulatory uncertainties. Now, on Tuesday, I spoke with Cathie Wood and asked her what was behind the recent moves to offload millions of dollars worth of GBTC and Coinbase shares. Here's what she had to say.
This is portfolio management, essentially. So we've had both appreciate quite dramatically this year. This has been the best performing asset by far this year, and we always do take profits. It's just simple portfolio management. On top of the actual price appreciation of Bitcoin, we've had the discount closing relative to NAV for GBTC. So that's been, a double impact in terms of appreciation. So it's just traditional portfolio management.
The change in holdings comes ahead of next month's expected decision by the SEC on spot Bitcoin ETFs. Both Grayscale and ARK21 shares have applications filed with the agency. The first deadline to approach is that of ARK21 shares. The SEC must approve or reject that application by January 10th. Wood told Bloomberg today that ARK believes the probability of an approval has gone up because the SEC has been, quote, highly engaged compared to what was happening before. All right, turning to crypto regulation for our main story. This year, there have been some remarkable advancements for crypto regulation around the world. In fact, in April, lawmakers in the European Union approved the world's first comprehensive framework for digital asset regulation. The EU's Markets in Crypto Assets Regulation, better known as MiCA, is due to take effect next year. Other jurisdictions, including Singapore, the UAE, and the UK, also experienced regulatory developments recently. So what region is winning the race when it comes to crypto regulation? Crypto World's Talia Kaplan sat down with industry experts for their take.
I think if we look at what's in front of us, the EU seems to be winning the race. They've taken a comprehensive approach. It's very collaborative and it appeals to the industry. But what MiCA's also doing is they're acknowledging what we're not addressing right now, or what they're not addressing right now. And in this industry, things move so fast and the technology moves so fast that you need to keep looking ahead and saying, okay, that's our next step. That's our next step. We need to be looking forward and be innovative in what we're doing. And they've started that process. And so I think, it will help with some of the logjam down the way. Whereas, the US, for example, we're still trying to figure out what we're going to call these things and who's going to be in charge. And so I think right now they're leading the race, and that's kind of the model the rest of us should look to.
There's no question that that Europe has seized a kind of first mover advantage. What we're seeing is, in the absence of a coordinated effort, like the one we had in 2008-09, and this may still come, it's just we haven't seen it yet. In the absence of a truly coordinated effort, we see nations like the European Union moving to adopt digital asset regulation, and then we see other nations looking for models for what they might do to adopt regulation. The United States not only exports dollars, it exports law, it exports legal concepts. And right now what we're seeing is Europe is winning that race to export legal concepts. And this comes in the form of other countries, right, looking to MiCA first, as opposed to the United States.
Do you think there are other regions that are making remarkable advancements from a regulation standpoint in crypto?
Absolutely. So we have an office in Singapore, and we love what we're seeing in the APAC region in general. We think it's been very forward-looking and thoughtful in attracting tech and internet entrepreneurs. In particular, the Singapore MAS, which is the regulator there, has been operating sandboxes that have allowed the industry to come in and play with concepts like understanding digital identity and how it might work in the digital space, right, and things like this that are going to be important ultimately for meeting other policy objectives. And if I had to say another region where we're really really bullish right now, say the Middle East. Actually, we're seeing, particularly in places like Dubai and Abu Dhabi, a real willingness to engage with the digital asset space. Dubai has a dedicated digital asset regulator. We think they're doing terrific work. And so absolutely, there are a number of bright spots globally, and we focus a lot of time on them.
I don't think it is the EU. I think there's been some interesting information that right after MiCA passed, there was a lot more VC investment in crypto businesses in the EU, but I don't think we've seen that all take off as much as everybody has expected. I do think that Circle has started creating a headquarters in France, and I think Coinbase and others are looking to also find EU type homes as well, but I don't think that everybody is going to pick up and move to the EU. I am hopeful that the US really takes a lead here to make sure that there is a good framework to continue building out this industry, but I actually think that Asia, which has actually been engaged in crypto asset regulation for longer than people have even talked about. Japan has had good regulations for centralized crypto asset exchanges for a long time, may actually win the race long term. I do think if anybody really could win the crypto regulatory race, it may also be the UK. They've been very forward thinking and very great at putting together a framework that's both meant to support innovation and also put on regulatory guardrails as well. And they have this access to great markets, right? The UK markets are really good. And so there are a lot of companies, both software development companies and more centralized crypto CeFi players moving to the UK. So I think we should expect a lot of US-based crypto companies to also be expanding overseas. And this is a global, borderless, right, technology. So of course people should be expanding all over the place as well.
Do you think it's too late for the US to catch up to the rest of the world as it pertains to crypto regulation?
No, I really don't. I see the surprise on your face. The US has been the home for innovation for a very long time, and particularly with Web 2. People do see this as an important market and an important place to build out technological activity. As I said, Asia is also extremely attractive, Dubai as well, including with their really great regulatory framework that they've been putting together. So there's certainly a race right now, but I don't think anybody will count the US out, particularly with the fact that there are two bills, at least, that have been out there and have passed out of committee.
I am concerned and have been concerned for some time that the US is falling behind. I frame it in many senses in two ways, right? Digital assets are a national security issue, and I can get into why I believe that is. And I believe digital assets are an American competitiveness issue. And I mean competitive in terms of taking market share in the internet economy. And we are right now, the internet economy doesn't care where you are, how big you are, what your legacy systems look like. It's a forward-looking economic pie. And so on the national security front, the United States has benefited both in terms of its treasury auctions, but also in terms of just global influence from being a leader, a thought leader in regulation. but also having dollar dominance, arguably, has been hugely helpful for the United States overall. I think when we have other countries issuing stablecoins that aren't denominated or backed by US dollars, we have a serious dollar hegemony issue, and that's a national security issue. I think there's economic activity that will be migrating to the internet. And I think if we want to have a piece of that pie, if we want to be dominant in that space as the United States, we have to be active and catch up to our friends around the world who are already looking at this space very closely and embracing it in a way that I think we've been a little bit reluctant to or cautious to so far. The good news is that it always takes the United States a long time to arrive at the right answer, but we always seem to do it. So I am very hopeful that we will do it in the coming years.
Okay, that's all for Crypto World today. We'll be back again tomorrow with a look at the state of Web3 startups this past year. We look forward to seeing you then.